The Nifty 50 index is now at a new lifetime high along with several other indices, and we have seen substantial a lot of activity when it comes to volumes as well, not only in the benchmarks but several other securities. But what is the way forward? For that, we have with us right now Dr. C.K. Narayan. He is the Managing Director with Growth Awareness Assets Advisors, and he's going to tell us about what we can do not only with the benchmarks but several other securities as well. Dr. Narayan, thank you for joining us. And my first question will have to do with the Nifty itself. Earlier in the year you had spoken about a pitchfork. We are currently at lifetime highs. What is the direction of Nifty now?
Well, when you hit lifetime highs, then you do need to exercise a bit of caution, as well as also continue to participate, because lifetime highs are elastic levels, right? You don't. There's nothing to kind of limit this. So you need to continue to be a part of this market, but at the same time you need to keep a lookout for whether there are any changes in the environment which might suggest that a high might be getting created here. As of now, there doesn't seem to be any kind of evidence, but if history has really taught us something, it is that the bear markets or the reversals emerge from the bluest of the blue skies. So right now we are having a spotless blue sky,
right,
and there really doesn't seem to be anything amiss anywhere, but that does not mean that something cannot appear. But we should not give in to our fears of trying to look for something which is not there right now. So we keep our guards up, but we should continue to participate in the market, because you really don't know how far this will go.
Right. So that brings me to the Nifty Bank Index as well, and once again that's also at lifetime highs. Where do you see that going? Upwards, I'm assuming.
See, similar to the Nifty, the Bank Nifty is also, like you said, at new highs. Now, speaking technically, you can put various numbers along the way. I might say that the typical range of April is about 400 points, and we touched down till about 9,000, 9,050
right,
during early part of April. And so then if you measure something like 350, 400 points up from there for being the average monthly range, you should work your way upwards till about 94, 94.25. That would be a kind of figure for April, but that's an average figure.
Right.
So similarly for Bank Nifty, you could probably make a target for about 22,200, 22,300 levels. But right now the momentum is quite substantial. So when momentum is very, very high, you have target spillovers also, because
right,
there is sort of localized increase in volatility, which might actually even surge past whatever targets you make. The targets are like milestones for you to work
right,
with, and we keep making them and we keep revising them as the market continues.
Okay. The other factor that I wanted to address here was the India Volatility Index, which has been trading anywhere between 11 and 12 at near record lows for the longest time. What does this mean for the markets?
Well, if you take the textbook definition of very low volatilities, historically this is really plumbing the depths as far as history is concerned. Historically, what we have seen is that whenever volatility readings reach very, very low levels, relatively speaking, then it is always a time for caution, because market tops are made on very low volatility levels. Similarly, the converse would also be true. That is why the cliche is, when the VIX is low, it is time to go.
Right.
Right. That's
yes,
what it says.
Yes.
And when the VIX is high, it is time to buy.
Right.
So I don't think most cliches are truths. Right. Now we have been going up for what, 4 months now. We had the last low in the Nifty on 26 December.
Right.
At about 7,900, and today we are at 9,300. So it's about 1,400 points on a trot without any kind of correction. So that is what has really led to the VIX kind of plumbing the depths.
Right.
Now, how long this can keep up is anybody's guess.
Okay.
But then history teaches us, then volatility becomes very, very low. You have to be on the alert.
On an immediate basis, what I've also noticed is that the 9,400 level, that's the 9,400 strike price, has the maximum open interest.
Right.
If I take that factor and combine it with the fact that the India Volatility Index is really low, could there be some concerns in the immediate future?
Well, you see, concerns are today only in the minds of people. There doesn't seem to be any concern in the market if you look at the way things are happening.
Okay.
You know, the indices are hitting new highs
Right.
every day as we speak. The small cap, mid cap indices are, sort of performing much better than even the main set of indices. The volumes are increasing, participation is increasing. There is this huge left out feeling in the market. Now, all these you can say could be signs of a high in the making.
Right.
But will the high in the making be today, or will it be a week from today, or will it be a month from today? That's very difficult to call, because ending phases of moves are always pretty dramatic.
Yeah.
And you are seeing a bit of drama right now as indices push to new highs.
Right.
And people are feeling really woeful about the fact that they have either cashed out of this market or they have failed to participate.
Right.
Now, like I said in my initial comments, you need to participate in this market with long positions, and you should avoid entering into short position because there is absolutely no call for doing it. Now 9400 strike price or 95, positions at strike prices are also very elastic because option traders are very nimble fellows.
Right.
They will very quickly unwind their position at 94 and shift it to 95 if the market dictates so. So I think we have to take the trend as it comes when you reach these higher levels, and keep your mind open, but yourself in a state of readiness to act otherwise if the data shows up or the evidence shows up.
Okay, just a couple more questions. I also wanted to ask you about the influence that FIIs now have, considering the fact that the domestic institutional flows have been substantial over the last couple of months.
Yeah, I think the real revelation of this phase of the bull market, the last 3-4 months, has been the extraordinary performance by the domestic funds.
Right.
And what is not being captured by the data is also the very, very large amount of inflow which is coming in from retail investors. And
Right.
when I say retail, I am also including within this the large HNI block.
Right.
See, there is no metric which actually captures their flow, and that flow has been very, very substantial.
Right.
I think that is really what is fueling the markets even further. So you are able to capture the data of only domestics and the foreigners. The foreigners have been on the sell side for a reasonable length of time, whereas the domestics are having substantial inflow. I read that the SIP has gone up to now about 5,000, 6,000 crores a month. Now that's a huge amount of flow. If every, let's say, fund house is actually getting 1,000 crores or something around that every month, I think they are bereft of ideas right now.
Right.
I mean, there is really a paucity of ideas where they can put in their money. So they are being forced to put in their money in the same stocks that they own, and since many of them are large cap and part of the index, or whether the small cap, mid cap or large cap, indices are going up even further. So everybody is caught in a kind of a positive loop right now,
Right.
where the flow of money is also feeding the moves in the index. Now this is all going to stop somewhere. The carousel is good. The carousel is going to stop somewhere.
Right.
But hey, who wants to call the end to this party?
Okay. And a related questions to FIIs. Of course, an important factor that influences FII flows is the rupee as well. Currently standing at around 64. What is your view on the rupee?
I think the rupee has really kind of caught everybody on the wrong foot, particularly the people who are local exporters. For a very long time they have been used to, when I say long, I mean really long.
Right.
They have been used to not hedging or strengthening rupee, because history has shown that the rupee would weaken from year to year to year to year.
Yes.
So they have all got caught out by not hedging this strength in the rupee. And I think now there is a flurry to actually undo that error.
Right.
And there is flow into the debt markets for sure. The equity markets have shown very, very small amounts of outflow. So there is positive inflow from the FI overall in the markets. And I think overall the scenario seems to be that the rupee is all set to strengthen even further. I think we were all taking 70 for granted, then we lowered that to 69, then to 68.
Right.
Now it is starting to seem like 67 would be too much for rupee to weaken. And it would not be surprising at all if you are looking at 6 months or 12 months down the line.
Right.
A reading of about 60 on the rupee seems very, very feasible.
Well, Dr. C.K. Narayan, it was a pleasure speaking with you. Thank you so much for your time.
Thank you for having me here.
Yeah, you're welcome.